Taking a look at the report, retail sales, they continue to be strong, seeing a lot of growth when it comes to online spending. How should we read this report? The fact that consumers keep spending, but at the same time, we continue to think that they're stretched.
I think that, Frank, your comments are right. They are stretched a little bit. They're stressed. The overall consumer is shopping. You're seeing growth. You saw a very healthy online number at plus 7%, but you're also seeing a slowing down in the overall rate of spending. Experiences are growing. Restaurants are showing good growth at 3%. Apparel, surprisingly, is continuing to grow at 2% as you're seeing some innovation in fabrications. I thought it was very interesting that the electronic space is continuing growing at 6%. That's saying that there's probably a replacement cycle that's beginning. But having said that, you're seeing some weaknesses. Home improvement, furniture are showing real weakness at -5%, and that's indicative of the slowing housing market, that people have been already staying at home, replacing their furnishings, and you're seeing slowness there. I think that what you're probably seeing is a lower end consumer that's very stressed. They're trading down. They're looking at value. You're not going out as often. I think that that's a very difficult consumer space. The high end consumer is very healthy.
Steve, let me jump in for a second. So in your mind, you mentioned the strength when it comes to apparel. I'm looking at the numbers here, up double digits over the last 3 months. The most recent month, up over 14%. So are you saying that's consumers specifically on the lower end deciding that I need clothes, I need shoes and things like that, of course, but pulling back from other areas to continue to buy those things, specifically online? I'm looking at online apparel sales, as I mentioned, up double digits over the last couple months.
I don't know that it's necessarily a trade-off. It's tracking apparel in aggregates growing at about 2%, which is a decently healthy number. I think that it's really brand by brand, and it's where there's innovation going on. The consumer is staying home. They want newness. They're at home. They're getting out. They're going to parties. They're looking for things that are innovative. So I think that there's an innovation cycle going on, and brands still matter. It's a story of winners and losers in the apparel space. So I do think that the apparel is healthy, but it's not just that that's overpowering strength. I see strength in the restaurant space as being indicative of the experiences, although even the restaurant space is
well, Steve, hold on a second. Let me interrupt you on that one.
Sure.
We continue to get reports that people are pulling back from restaurants, actually, and I'm looking at the restaurant spending number up 3.1% year over year. That's very close to the inflation number. I mean, when you look at this data, how much is this increase in spending simply due to inflation? How much is it due to actually people spending more and going to more restaurants?
Oh, I think it's largely driven by inflation. If you look at that 3%, it's still a good, healthy number. It's showing the consumer is still spending, but that is a lower rate of spend than we've seen over the last year. So as inflation rate has come down, you're seeing a slowing in the growth rate of the restaurants. And I think that that's a sense of where the lower end, a lot of it is where the lower end consumer is having a much tougher time and having to make trade-offs. I don't think you're seeing a slowdown as much in the high-end consumer in the experiential side. The high-end consumer is slowing down in their purchases of goods, things. You see it in a lot of the luxury brands that are selling accessories, et cetera, where you're seeing a slowdown, but you're not seeing the higher end in the experiential side.
Yeah, I know you also mentioned that we're seeing a bit of an uptick in jewelry also as we get closer to Mother's Day. So certainly some seasonal factors there as well. Steve Sadove from Mastercard, great to see you as always.
Another quick factor, which is that it's a swing in Easter. Easter was early this year. It was later this year. So you're coming off of a number that doesn't include an Easter spend.